Let's talk about the trade war, Joel. In simple words, what's it all about?
Well, a lot of what Trump seems to be doing, and who really knows, because he does change his mind often. But the general spirit is to try to find some balance in the tariffs that are being charged across the world, and using whatever communications he can to get other countries to balance with the U.S. So it's at the end of the day, if we're talking from an investing standpoint, the total amount of tariffs that they've discussed so far for Europe and China would affect some European stocks, some U.S. stocks, and some Chinese stocks, meaning in the particular industries that the tariffs are going to be affected. But for the overall S&P 500, it's a really small amount. It's a very small item. And so I don't want to say that it's inconsequential, but relative to the strength of corporate earnings, relative to the valuations, it would not by itself change our view that the S&P 500 still has a bull market coming for the next 2 to 3 years. You might be worried about some individual names, but overall, it's actually small relative to the total. Now, who knows, because it develops and what gets included and what gets knocked out from the discussions seems to have a lot to do with political saber rattling, if you will. But I wouldn't say right now that it's something that hasn't already been priced in. Meaning the very fact that the stock market right now has hit some lows in the last 6 months and has recovered, I think is reflecting that people are already pricing in that concern. And at the end of the day, it's still going to be corporate earnings that are going to drive valuations. And they will be, across the S&P 500, not hit anywhere near as badly as I think some of the headlines would have you think.
That the rates are now climbing up in the U.S. and that money is now returning to the U.S. with the good earnings and, of course, bad markets for us. So are we expecting the market to continue to be like this here in the Philippines?
Yeah, interest rates are increasing, but they're going from near zero to slightly less than zero. I mean, these are very, very low historically. I'm talking 100 years of interest rates. These are still low. Even if the Fed were to raise quite significantly for the next 8 quarters, you'd still be looking at then, 2 years from now, a number that we'd start saying, okay, let's have some concern. But going from very, very low to very low is not as worrisome, right? I think at the end, what you're seeing in the Philippines and the rollover in the market here is as much fund flows as anything else. The fundamentals of the Philippines, and I'll specifically talk about the 3 things. From a corporate credit standpoint, very safe, very strong balance sheets, very strong banks, nothing that would have us concerned that there'd be a credit collapse. Again, without a credit collapse, you will not have an equity market collapse. You can have corrections, you can have rollovers, but that's as much to do with fund flows as anything else. So, yes, the fund flows and the recent fall in the Philippine stock market brings the market down a bit, but these are buying opportunities. People forget, you're supposed to buy when the market's low, not when the market's high. Everybody wants to buy when the market's high. This is the time that investors should be putting in because you're getting an opportunity that you didn't have 6 months ago when the Philippine stock market was at
9,000.
Hitting those levels, right? So when you're looking at the 72, 7,300 range, wonderful time to buy. Could it come down to, I'll say, some technical lows in the 6,800 range? It could. We'd consider continue peso cost averaging. Peso cost averaging into the index should still be the core, right? And when the market's down, this is the opportunity to keep buying into your core. Right? And then when the markets are up, then you can play a little with that money and say, okay, let me take some out and put 2 to 4% into an individual name. But as of right now, no, the PSEi is still a wonderful place because the credit is solid. Earnings is still strong and robust overall. And valuations, frankly, on a uniform basis, again, are still muted. It's reasonable valuations. Now, they might get cheaper from here. That happens because of fund flows, right? I think there's a Buffett saying, in the short term, the market is a voting machine, but in the long term, it's a weighing machine. So right now, the voting has people scared. The sentiment has people running away. Well, that's the opportunity because the weighing machine, meaning the credit, the earnings, and the valuation combined, the weighing machine is very, very solid. And over the next 5 to 10 years, the Philippines is going to do fantastic. The Philippine stock market will do fantastic. And so for any long-term holder, core, you should be in the PSEi. And if you have some money internationally, then in the S&P 500.
All right. Okay. Thank you very much.
Of course.
Spending time with us.
Happy to, man.
Thank you. Thank you very much.
Thank you.